Hey everyone, and welcome back to February 27th Stock Talk. So I'm glad to see everyone back again. We're starting on the S&P 500 or SPY chart. We have slightly less frequent updates nowadays, but what you can see is these updates are here to be meaningful. And the purpose of these updates is not to give you necessarily a day-by-day scope. You can, if you want that, you can certainly take a look at the course, which is in the link down below, but it's to give you a big picture, big scheme of where are some possible targets that we could be possibly going to. Now, here's the deal. Here's the S&P 500 SPY. And last time, in the last video, which was done, I believe, in early February, we said that if we are able to surpass the 270 to 271 level, we'll be making an attempt, at least, in my opinion, towards the 280 to 281 level. That has now been satisfied. So you might be like, well, Kevin, what's next? Can you tell me what's next? Well, here's the deal, right? The market has been on an uptrend. It is on an extended run. Can it keep going higher past 281? It can, but what do we need to see first? We need to see it be able to cross the 281 level, and then if we are able to cross that level, then we would be looking towards the next area of possible resistance around 287.75. And by that point, we could be making a run towards all-time highs of 293.94. However, what we can see right now is we haven't surpassed the 281 level. So keep that in mind. And right now you look at the charts and you're like, well, Kevin, yeah, we came down the past few days, but it hasn't done much. Look at these green candles. Doesn't this candle look like all these other candles that eventually could possibly move higher? Possibly. But you have to take it for what it's worth. And for what it's worth, there is a rejection at that level. It's by 281. And therefore, we would be looking towards downside targets. Now, what are the downside targets that I'm looking at right now? Well, you can see the convergence of the moving averages right here around 274.50. That's the first possible target. Now, there are more targets down here. Okay, 270.42, and then there's another support, 263, final support around 257. Those are all, in my opinion, areas of support where we could see a market reaction or a buy the dip reaction. The big question here is, if we retrace, where do we retrace to? Where is the bottom going to be? So how do we know? We'll have to monitor the reaction, and this is what our group is constantly doing, monitoring reactions at support resistance points, identifying possibly new support resistance areas on the charts. And if you want to join us, the link is in the down below. Take a look at the course. It's everything that I teach. So that's what we're looking at on the broad markets. Okay. So remember we passed 271. Now we headed towards 281. Those criterion are fulfilled. That's done. Now we look at the next step, and I just kind of laid it out to you. This is what I'm looking for in the next step. Okay? All right. That's the S&P 500. And I hear many times, and this is something I told the group members as well, I hear many times how people are like, well, you know what? I captured this gain all the way possibly to 265.75. But then this move, well, this move is a little bit insignificant because, well, if you look at percentage terms, this move is only, let's say, 3 to 4%. But this move was so much more. That's sort of true if you're looking into bullish ETFs that follow the indices. But what you can see, and I've told the group members this, is that a lot of the gains are also coming from individual stocks. While the market has been only going up 3 to 4%, individual stocks that have been strong or had shown weakness during the correction are still able to rally significantly more than 4% in this time span. So it's kind of that argument that you know, I completely exited around here and then discounting the fact of this leg up. You know, it's a halfway kind of deal. So take that for what that is worth. Next up is TVIX or TVIX. Now, looking at TVIX, all you can see is it's moving lower, and there's really no sign of reversal just yet. So what we can see from the yearly or the daily candle chart is that here is a major support that was eventually broken, and this was on February 20th. So right now, this is an area of support. Looks like we're coming back to retest that area. So of course, volatility, if the markets are going to be going down in synchrony, then what we have to see is volatility has to increase as well. This has to go hand in hand. Right now, do we see a definitive bottom for volatility? Not yet, but the picture will become more clear once we have some more trading days. So we don't have, on this chart at least, don't have a signal of bullishness volatility, but we'll have to be on the lookout if the markets do go lower. Okay, now if it goes sideways, volatility might just drop anyway, so also keep that in mind. All right, TVIX. Next, we'll take a look at crude oil. So crude oil, what you can see here is that we have a support line that moves higher, and we broke under, and now what's happening is crude oil has been bullish. Can you see this? Bullish, and then pretty much at or near the 20 period moving average, and is moving higher. But what you can see here is that around $60 is the next area of major resistance. We're not too far away from that, but crude oil is bullish until said otherwise, and look for that to be a resistance as moving averages are curving lower as well. And then finally, oh, got two more to go. We'll do nat gas here. Now, natural gas, and let me take this out really quick. So for natural gas, what you can see here is that we held a support at 2.583, and what you can see is we did a double bottom. It's kind of hard to see, but this is within a scope of 7 days or 6 days, 6 trading days, and then we went higher. However, and this is a problem, what the problem for natural gas is that while we have a bounce on this chart, the bounce might not be sustainable for a long period of time, let's say a monthly time frame. So this might still push lower, while near term it looks like we're pushing and have the ability to push higher. In the long term, this is going to have a hard time, let's say traversing through 3.0 and then 3.5, around those facilities. So it's going to have a hard time through those areas. Finally, if you take a look at gold, gold has been on an uptrend, and we've talked about gold for quite a bit, how it's been bullish, and gold continues to be bullish. If you look at the 20 period moving average, for the most part, it's verified that as a support. So right now we're at the 20 period, we're nearing another support area of 1313. Look for this one to continue to climb if the trend holds towards even the upwards target of 1362 to 1363. But what you can see is it's still pretty consistent. It's still moving higher. Big question is, will gold have another push? Until said otherwise, we do assume, and we assume just based off of technicals, that is, that it will move higher. Remember, the pattern is going to continue until the pattern breaks. So here you go. So there's gold. And with that, I want to thank everyone for joining me on this video. If you enjoyed this video, as always, please hit the thumbs up button. Highly appreciate it. Of course, if you didn't like the video, no need to hit the thumbs up button, but you can let me know what I need to improve upon, or what you'd like to see in the future. So thank you very much for watching this video, and I will see you all soon. Of course, happy trading.